Cathie Wood just stunned Wall Street with a move no one saw coming. After relentlessly selling some of her biggest holdings all year, even unloading shares on the last days of July, she suddenly flipped bullish. And here's the twist. She's now buying back the very same stocks she dumped just weeks ago, pouring millions into them right after their latest earnings reports. Why would one of the most closely watched investors in the world reverse course so quickly? In her words, the market is underestimating the power of disruptive innovation in a disinflationary environment. While the headlines scream about inflation and interest rates, Cathie is betting that breakthrough technologies in finance, blockchain, and streaming will drive the next rally. Stick around, because one of these companies could evolve into the most disruptive consumer finance platform of the decade, while another is quietly building the rails to become the NASDAQ, Visa, and AWS of the blockchain era, all rolled into one. Let's break down the three stocks Cathie Wood is aggressively buying right now. SoFi Technologies Incorporated, SoFi. Cathie's biggest conviction play in August is SoFi, a fintech company that's evolving far beyond its roots as a student loan lender. ARK Invest has added heavily, with multiple buys totaling tens of millions over the summer, including a fresh $1.1 million right after earnings. And it's easy to see why. SoFi's Q2 results blew Wall Street away. Revenue, $858 million, up 44% year over year. Adjusted net income, well, above expectations. Guidance, raised to 30% full-year revenue growth. But the real story is the business transformation. Only a few years ago, SoFi was heavily reliant on lending. Today, nearly 40% of its revenue comes from financial services like checking, savings, investing, and credit cards, up from just 2% 5 years ago. That shift makes SoFi far less sensitive to Fed rate moves and positions it for scalable, fee-based growth. The lending segment is still a profit engine with a healthy credit portfolio and declining charge-off ratios, a key sign of strong underwriting even in a tougher economy. But the real excitement lies in SoFi's ecosystem. A one-stop shop where members can borrow, save, invest, trade stocks, buy crypto, and soon even transact with stablecoins. Yes, SoFi has re-entered crypto trading and plans to launch its own stablecoin within 24 months. That could cut costly foreign exchange fees for members, boost margins, and open a new high-growth payments business. Combine that with 50% plus membership growth year over year and rising contribution margins, now 52%, and you've got one of the fastest scaling fintechs in the US. Cathie would see SoFi not just as a bank, but as a next-gen financial super app, and she's betting that Wall Street hasn't fully priced in how disruptive it could become. Coinbase Global Incorporated Coin. Next on Cathie's buy list is Coinbase, a company she had been trimming for months, only to buy back $23 million worth of shares on August 1st. That kind of reversal right after earnings tells us one thing. She sees the long-term story strengthening. Coinbase is no longer just a crypto exchange. Under CEO Brian Armstrong's vision, it's evolving into the everything exchange, a platform where all asset classes could eventually trade on-chain. Think beyond Bitcoin and Ethereum. Imagine stocks, bonds, commodities, even real estate tokens, all transacted on blockchain rails. In Q2, Coinbase rolled out new derivatives, integrated deeper with decentralized exchanges, and made progress toward tokenized equities. These moves position Coinbase as the infrastructure backbone of the financial system of tomorrow. Payments are another frontier. Coinbase is leveraging USDC, the largest regulated dollar stablecoin, to power a full-stack payments ecosystem. From global B2B transactions to everyday consumer spending, stablecoins could revolutionize how money moves. And with Shopify partnerships already live, Coinbase is planting seeds in a multi-trillion-dollar payments market. Institutional adoption is also ramping up fast. BlackRock, PNC, Stripe, PayPal, and even over 150 U.S. government agencies now rely on Coinbase for custody and infrastructure. That's not speculative hype, that's real institutional trust. Regulation, once the biggest overhang, is also easing. With recent legal clarity and growing bipartisan support for crypto frameworks in the U.S., Coinbase path to scaling crypto as a service looks far less obstructed. For Cathie Wood, this setup is classic. A beaten-down stock at the center of a trillion-dollar transformation. If Coinbase executes, it won't just be a trading platform. It could become the NASDAQ, Visa, and AWS of the blockchain era, all in one. Roku Incorporated, Roku. Finally, let's talk Roku, a stock Cathie had been trimming right up until July, only to buy nearly $19 million worth of shares in August. What changed? Roku's Q2 earnings made it clear the company is not only surviving the streaming wars, it's thriving. Here's the scorecard. Revenue: $1.11 billion, up 15% year-over-year. Platform revenue: up 18%, proving the strength of its high-margin ad business. Adjusted EBITDA: up 79%. Free cash flow: $392 million over the last year. Roku isn't in the business of producing shows, it's the operating system of streaming. As the #1 streaming OS in the US, it takes a cut no matter which platform wins: Netflix, Disney Plus, or Max. That platform-agnostic model makes Roku resilient. But advertising is where the real growth is. As ad budgets shift from traditional TV to streaming, Roku is positioned as a primary beneficiary. Its new tools like Roku Ads Manager for small businesses and a DSP partnership with Amazon are helping advertisers target more effectively while avoiding repetitive, annoying ad overload. On the hardware side, Roku continues to refresh its devices, making them cheaper, smaller, and more energy efficient. That not only improves gross margins, but also keeps new households joining the Roku ecosystem. For Cathie Wood, Roku represents a classic buy-the-dip opportunity. The stock's pullback doesn't reflect its long runway in advertising and streaming dominance. And with its platform model improving margins and strong cash flow, Roku could still be early in its growth story as streaming cements itself as the world's default way of watching TV. So there you have it. SoFi, Coinbase, and Roku, 3 stocks Cathie Wood is suddenly buying back after months of selling. Each one represents a bold bet on disruption. Fintech reinventing banking, blockchain redefining finance, and streaming transforming entertainment. While Wall Street stays glued to the Fed and inflation data, Cathie is playing the long game. The question is, will her contrarian timing pay off again, or is she jumping in too early? Let me know what you think in the comments. Don't forget to smash that like button if you found this breakdown valuable, and hit subscribe so you never miss the next deep dive into the market's most disruptive companies.